You may have heard some real estate lingo like rental income, mortgage, interest, and amortization. When you step into the world of commercial real estate, you will begin to see other terms like cap rate thrown around as if everyone already knows what that means. As a passive investor, you won't have to do any of the heavy work to calculate cap rates, but it's helpful to have a very basic grasp on what they are. Hi, I'm Harry Nima Segara, founder of Nima Equity, and today we'll talk about cap rates and what you need to know about them as a passive investor. So what are cap rates? Cap rates is short for capitalization rate and is used to indicate the rate of return expected for a particular property. Investors use cap rates to estimate the potential ROI or return on investment for a particular property. When someone says a property has a cap rate of 5%, they are talking about the ROI on that property. How are cap rates calculated? Most cap rates are calculated by taking the net operating income and dividing it by the market value of the property. As an example, let's talk about a property valued at $1 million. Over the past year, it produced $100,000 in income. After paying $50,000 in expenses, we ended up with $50,000 in net operating income or NOI. We take the NOI of $50,000 and divide that by the value of the property. So $50,000 over $1 million equals 5%. So the cap rate is 5 or 5%. The higher the cap rate, the faster you would earn back your investment capital or return on investment, and the better the investment choice. How are cap rates used? Some investors rely heavily on cap rates and look for investments with cap rates of 6 to 8% or higher, for example. However, that's just one data point from only one particular year on an asset. Cap rates do not take into consideration other factors like interest rates or the time value of money. Cap rates can also be a good general measure of the asset class and corresponding risk in general. Assets with higher cap rates tend to be in developing areas, and those with lower cap rates may be in more established areas. As with most investments, a higher rate means better return on investment, but higher risk as well. Now that you know what cap rates are, how they are calculated, and how they are used, do you need them? Not really. As a passive investor, there are many data points that are far more important. On these times with high interest rates and low rent growth, the track record of the sponsorship team on a real estate syndication investment should be the top thing you look at. Otherwise, the cap rate might carry weight in these two scenarios. Number one, is cap rate comparable to other assets in the area? A strong sponsorship team will have already evaluated the property to ensure the cap rate is comparable to others in the area. But you could double check that your property isn't 4% while others are 7%. That would be a red flag. Number two, what's the exit cap rate? Another new concept. It is a measure of the cap rate at the sale of the asset. If nothing else, take this knowledge with you. When evaluating a potential real estate syndication deal, be sure the exit cap rate is at least 0.5% higher than the current cap rate. So this means that the sponsors believe the property or market conditions will be worse than it is now. In other words, they assume things will be in worse condition than they are now and that the property will sell for a lower price. If the current cap rate is 5%, then the exit cap rate should be at least 5.5%. That would be a great indicator of conservative underwriting, and projections include the possibility of the market softening in upcoming years. Cap rates all said and done, at the end of the day, cap rate is a single measurement at a single point in time based on the current performance of a given property and market. Cap rates do not measure the potential of an asset or how much you will receive in distributions. If you like this video, help others find it by giving it a thumbs up below. Want to hear more about syndications? Make sure you subscribe to our channel. Feel free to share with a friend or a colleague while you're at it. I'm Harry Nima Segara with Nima Equity. Thank you for watching, and I'll see you again soon.